I'm a personal finance author and I've personally been investing for over 30 years. Here I share what I've learned on that journey along with a few other personal finance tips because I'm sort of a nerd in that way. Now, around our house, we started talking about the possibility of downsizing. We bought this home when our kids were younger, and it's a pretty big house. And not only that, we really like the country, and Austin has grown up around us since we bought this house. So we've been talking about maybe moving a little bit further out, moving into a smaller house. And so, as I tend to do, I grabbed my calculator, started doing spreadsheets, and I've really embraced this whole process of analyzing a downsize. And so in this video, I want to share with you that process. So the very first step in doing this is to simply calculate how much money you will save or how much you'll lower your expenses by moving to a new home. Okay, so things to consider might be if your square footage is smaller, your electric bill will probably be less, maybe your water bill, taxes, property taxes, and you'll know more about that once you do some of the other steps. So bear with me. Property taxes, things like homeowner association dues, if you have lawn care, for example, that you wouldn't have if you moved to a smaller home or a zero lot or a lock and leave type of place. So that's the first kind of starting point, is calculate about how much your expenses would be lower from a cash flow standpoint. And I think the best way to do that is simply to list out all your current expenses that you pay that are related to your home that would be different if you were in a smaller home. So you're probably already tracking those, right? And so all you have to do is copy them to a new spreadsheet. And then alongside that, the next column over, just write how much you think that expense would be if you downsized or moved to a smaller home. And you'll have more details later once you get to some of these later steps. But that's a sort of an overview to just sort of think, does this make sense for me at all? Okay, so that's step one. Step two is to simply note whether you would probably finance your new home or whether you would pay for it. If you own your existing home outright, you would have plenty of cash. So you may want to apply that toward a new, less expensive home, in which case you wouldn't have a mortgage. You may want to make a down payment and have another mortgage. The mortgage may be over 15 or 30 years, so your payment would very likely go down, especially if it's a less expensive house. But keep in mind that if you've almost paid off where you are now, and you buy a new home and you refinance it, well, you could pull that money out and keep all that equity. You also, at the end of the day, if you stretch it out, your payments out for your home another 30 years, while yes, it increases your cash flow, end of the day, it costs you more. That house costs you more because you've had to pay interest on that home over the years. So these are sort of a lot of variables around this that I'm throwing out at you, but they're all factors to consider. The other thing I want to mention is that with interest rates still near all-time lows, it's a great time to lock in low interest rates if you do want to finance. There's something really wonderful about having borrowed money at 4 or 5% and interest rates being at 8 or 9%. So that's step number two, is just sort of start thinking about it and brainstorming around that piece of it. Would you refinance a new house or finance, I should say, a house if you bought it, and how much, and how much would you pull out of your existing home, and how much would you apply toward a down payment, okay? And then the third step is to consider the overall real estate market before you do anything. So you may have seen some of my other videos where I talk about how the real estate market, the stock market, are subject to those swings, those longer term swings in the economy and interest rates. And an ideal time to downsize is when the market is very strong, because you're selling a more expensive property and you're buying a cheaper property. The opposite is true when the market is really cheap. So keep that in mind and see what the overall market in real estate is doing when you're considering doing this. The next step that I like to take is to determine the size home that you want. So what I did with this is I listed all the rooms in our house. I wrote approximate square footage. Now, don't get too exact about this. Don't get caught up in the exact details, or else it will never get done. So what I think about is I'm about 5.5 feet tall, and if I laid across the room, could I lay across the room twice? And I use that, or 3 times, or 4 times. And I use that as a very rough estimate for about how big our rooms are. And then I had this on a spreadsheet. The next column over, I put ideally how big could that room be. You know, if I have a huge living room, for example, which my living room is pretty big, and I'd be perfectly happy with one that's maybe 2/3 the size, then I wrote that down. If I have a big game room, you know, do I need a game room at all? That would be a 0. I really don't. Do I like my den? Do I want a den? Yeah, I do. I love my den. I would actually like for it to be bigger because it adjoins my kitchen, and that's where we always hang out all the time. So write down, you know, how much ideally square footage each room would be, and then total it up and see the difference in what you came up with. Now, now you know sort of or how much smaller of a home that you would be happy with. Okay. The next thing is to consider how much money you'll make from the sale of your home now. So think of about how much comparable homes are going for in your neighborhood, and take that number, the per square footage, and then take that number times the total square footage of your current home, and then that would be the approximate sale price. You want to deduct from that commissions that you would pay to a real estate agent, and any fix-up costs that you would incur in getting your house on the market, which I highly recommend, you know, unless you've completely just updated your home, which you probably haven't if you're about to downsize. You know, what do you need to do? And what we did is we had a realtor walk through our home and give us recommendations on what we should do to get the home ready to sell. And we did that about a year ago. This doesn't have to be an overnight thing. It is a process, but I think it's also important to consider the overall market. And if the market is really strong and high, ask yourself, how much longer do I think this market will hold up? So there's that. So figure out how much money you'll end up netting after you sell your home. Now, I do want to mention something that's so fantastic about this as a wealth building strategy, and that is that there is a wonderful and rare, completely tax-free capital gain off the sale of your primary residence. Now, as you know, tax laws change and they vary based on your individual circumstances, but this is a very generous and very common capital gain, tax-free capital gain. So check it out and see if that would apply to you, because that can really be a significant wealth enhancement tool. The next step, or step number 6, is simply to write down, kind of brainstorm areas and neighborhoods where you would be happy living. So we sort of know we would like to move out of the city a little bit more. So we didn't even think about neighborhoods in town. What do you want? What do you like? Are there surrounding areas you'd like to move to? Can you come to an agreement with your spouse if you're married? So brainstorm ideas and make a note of the places that you would really like to live as far as neighborhoods. And also make a note of the amenities that you like, that you want nearby. For example, I knew I wanted to be pretty close to a grocery store that has high quality, preferably organic food. So my joke is I don't want to be more than 25 minutes from Whole Foods Market. But there are other grocery stores that certainly have that in the Austin area. I regularly attend a program at a church twice a week. I didn't want to be too far from that. So what is it? I have healthcare providers I really, really like. I don't want to be too far from. What is it for you that you really want to be close to? So write those things down so you have them in mind. And also make a note of the things that would be, you know, deal killers for you as far as a home. You know, do you want a yard or do you not want a yard? Do you want brick construction, or do you want, wooden siding, or like for us, we love limestone. So brick would probably be a deal killer for my husband. I like brick, but he really doesn't. So write down the deal killers and the things that are super important to you. Another thing I've noticed as I've been looking around a little bit is a lot of flippers have come in and they've redone houses, all gray, very contemporary, all glass tiles. I kind of feel like it's a little bit of a trend and it's not my style. So I don't want to pay an extra $50,000 for someone else's taste in redoing something that I don't even like. So keep that in mind as well, because in the Austin area, almost everything has been flipped already. Okay, so then the next step is consider whether, and this is sort of just to plant a seed for thought. Consider whether you might want to lease out a freestanding building on the property to something like Airbnb or VRBO. A lot of people are generating extra income from these avenues now, and if you live in a city that is in high demand for that type of thing, that might be a nice little extra income stream, especially if you travel and you're going to be gone some of the year anyway, or if you have a second home. The next step, the 8th step, is to look at all the financial factors that we have, that you've come up with in this exploration. So I want to cheat a little bit here and look at my list. I want to make sure I don't leave anything off. So the first one is the amount of increase in your monthly cash flow. Okay. The second one is the amount of capital you'll make. So how much money will you walk away with at the end of the day? And think about how you can invest that money. The amount you can make from investing that money that you'll make from the sale of your home, and also from those monthly increases in your cash flow that you can then invest. Consider that if you buy back into real estate after a correction, when prices are cheaper, that there's an opportunity there to build wealth as well. So factor that into your overall numbers. While you don't have anything real specific, real estate markets drop by 20, 30, 40% at times more. So that's a consideration as well. So if the numbers make sense, and this is something that seems like it would work for you, and you sort of get excited about doing this, then I invite you to look online, and you may even want to take this step earlier. Look online and explore the online websites that show you specifically those areas that you came up with, and the price points. And not only that, you can also go ahead right then and look at the taxes that are paid on that property. You can look at pictures to see if it looks like your style. You can do so much research online now with websites that provide this information. And you can do all of that before you even spend time going to open houses and really delving into the exploring the houses in more detail. You can see if the numbers work for you. So that's what I wanted to share with you in this video. If you found this information helpful, I'd love it if you give me a thumbs up button or the thumbs up click below the video. It means a lot. And I'll put some more information about this in the description area below this video. Thanks for watching.